The Trump administration in the US wants to take a serious look at and into Fort Knox, the legendary storehouse of American gold reserves in the state of Kentucky. Why? Just to make sure that their gold is there. Where could it have gone? And if indeed some of it or all of it is missing, what does it mean to the US economy? And if you set that question aside, how much gold does India hold? And where do we keep our reserves? Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. US President Donald Trump has said that if any or all of the gold at Fort Knox is missing, they'd be very upset. That's an understatement for sure. Trump associate and special US government employee Elon Musk recently asked on the X platform, formerly Twitter, who is confirming that the gold wasn't stolen from Fort Knox? Maybe it's there, maybe it's not. And if the US government indeed goes searching for gold in Fort Knox, there's a very good chance that Elon Musk would have it live streamed online for the US audience. Trump appointee and US Treasury Secretary Scott Bessent recently said in a radio talk show that all the gold that they claim to be there is indeed there and is all accounted for. Mr. Bessent said that the audit happens once a year. He was also open to Musk's suggestion that there must be an inspection, and he said that could be arranged for any senator who expresses an interest. Now, where all does the US hold all of its gold reserves? One, of course, is at Fort Knox. The other two locations are West Point in the state of New York and Denver in the state of Colorado. But more than half of all US gold reserves are held at Fort Knox. What is the value of all the gold that the US holds? It holds about 8,133.5 tons, last count. The market value tells us that the value of this gold is in excess of $780 billion. But here's the catch. In 1973, when the US intended to delink the value of the dollar from the gold standard, they set the value of an ounce of gold that they held at a mere 42 point something dollars. And that hasn't changed yet. So the book value of all the gold that the US holds comes to about $11 billion. But if you apply the market rate, that goes about $780 billion. And if you look at just the gold that Fort Knox holds, it's about 147 million ounces or troy ounces, and that comes to about $441 billion. And now, could that change? That is, the value of the gold that it holds, can it be changed? Of course it could be. The value of the gold is pegged only to the book value, and that could be changed easily via an act of Congress. And if that happens, the value of the gold rises immediately to reflect the market value. But what if indeed part or all of the gold at Fort Knox went missing? That would be quite the scandal, wouldn't it? Because if $441 billion worth out of a total of $780 billion worth of gold went missing, that could send the US economy into a spiral. Famed author Robert Kiyosaki, author of Rich Dad, Poor Dad, said that he doubted very much if any of the gold at Fort Knox would have gone missing. But if it indeed had gone missing, here's what he had to say. The US economy would collapse. The dollar would crash, the world would be in chaos, and inflation would wipe out millions of people, families, and businesses. If the gold had indeed gone missing, then the US dollar will be toilet paper, silver will be king. That's quite a dire warning, but more moderate voices in the industry tell us that because the dollar value is no more pegged to a gold standard, the technical impact of the missing gold would be very little on the dollar itself and hence on the US economy. But historically, whenever the US economy seems to be facing challenges, the value of the dollar would go down. And because gold is a safe haven for investors, they would all rush there and the price of gold increases. So there's always an inverse correlation between the value of gold, the price of gold, and the value of the dollar. But in recent times, because of Trump's policy announcements and his intentions, both have risen, both the price of gold as well as the value of the dollar. So if part of the gold or all of the gold at Fort Knox has indeed gone missing, then one would assume that the availability of such gold in the market has gone off. So simple economics tells us when availability of whatever item that you want to purchase or is in demand, the availability goes down, then the prices are spurred upwards. That would happen to gold. And there is a likelihood if that happens, then the value of the dollar could go down. That brings us to the Indian side of the equation. Where do we store our gold? The Indian government stores its gold reserves in high security vaults located in Mumbai and Nagpur. And how much do we have in reserve At the end of March 2024, India held a total of 822 tons of the precious metal as per official data. The Reserve Bank, like other central banks, has been purchasing gold in recent years to add to its holdings. It was among the major purchases in 2024. World Gold Council data tells us that RBI purchased 73 tons, or 4 times as much the gold it bought in 2023, which was a mere 16 tons. At the end of 2024, RBI's reserves in gold totaled 876 tons, according to the latest economic survey. Now, why should governments buy gold? Governments purchase gold via their central banks to help diversify their reserves. Gold acts as a hedge. If you look at your own holdings, your personal portfolio, financial advisors would have you buy stocks either directly or via mutual funds and so on. But they would also urge you to hold, say, 5 to 10% of the total value of your portfolio via gold holdings, either physical or otherwise. Why? Because gold acts as a hedge. Similarly, for governments, gold helps protect their currencies to a certain extent. Historically, whenever economies across the world have gone down, spiraled downwards, and stock markets have crashed, investors have rushed to gold to start buying because gold is seen as a safe haven asset. So that has sent the prices of gold spurring at different points in time. If we ask a question now as to why governments should buy gold, we as Indians should not forget what happened in 1991. We had to pledge our gold holdings in order to raise some foreign currency. This was a decision, momentous decision taken by then Finance Minister Dr. Manmohan Singh under then Prime Minister Mr. Narasimha Rao. And why did we have to pledge our gold back in 1991? Because the extent of our external debt was about $72 billion and our foreign reserve holdings were about $5.8 billion only and fast running out. So to prevent a sovereign debt default, we had to pledge our gold to get some foreign currency assets. Today, our foreign currency reserves, including the value of our gold holdings, is significantly higher than what we saw in 1991. And we are in a comfortable position. And destiny forbid, if we have to pledge our gold holdings again to raise funds, we are in a sweet spot. That brings us to the nuggets of information section we have for you every week. Did you know that the first gold that Fort Knox received was in 1937, and that too via the US Postal Service? In 1936, the Fort Knox Bullion Depository opened in Kentucky. The next year, the facility received its first shipment of gold from the Philadelphia Mint and the New York Assay Office. The bullion was shipped by train through the US mail. And here's a quiz question for this week. Where and when did India's first mint under the East India Company come up? And here's the answer to last week's quiz question. Which country was the first to implement a minimum wage and when? New Zealand was the first to implement a minimum wage in 1894, followed by the Australian state of Victoria in 1896 and the United Kingdom in 1909. That's all we have for you in this episode, folks. If you enjoyed what you saw, do not forget to like, share and subscribe. Until we meet again, have a lovely time ahead.